Hi, this is Joe Rabil with Rabil Stock Research. So I like to start the show out with a lesson. And today I'm going to talk about a simple single moving average in multiple time frames and how using it in the way I'm going to show, finding Confluence can really improve our timing. All right. And then what I want to do is go through some of the sector action that's taken place. I'm going to look at a few indices as well. And then I'm going to cover all the stock requests that came in during the course of this week. If you have an interest in having me go through and analyze one of the stocks you're interested in, go ahead and put it in the comment area, or you can send it to stocktalk at stockcharts.com. Let's go ahead and get started with this lesson. Okay, I've got a few examples and I've really simplified my look. I've got my 4 time frames up. I've got the monthly in the bottom left, weekly bottom right, daily upper right, and then hourly in the upper left. And I do have the volume up, but I just have price and an 18 MA on each one of the time frames. All right. And I want to explain how I think by just understanding this one simple concept, it can improve your timing. Now, when we start to overlay some of the indicators I use like MACD and ADX, I think we can even improve upon that and know when the signals have a lot more strength behind them. But let's just start with this. And the longer term, the moving average that we use, the more important it is. So the granddaddy for me is the 18-month line. All right. This line is very powerful. When it's got slope to it and the stock is respecting it, we want to continue to recognize that. As long as that's the case, we know that we can use it as a platform for buying opportunities. Now, I just want to focus in on this last pullback because we know we had this turn where the moving average, the 18-month was declining during the bear market, and then it turned up in 2023. And we had respect for it because we had a pullback. We had a correction, a 3-month decline. And it failed to break that line, and the line held it and it turned up. All right. And then we get a move to the upside and we get stretched away from that line. And this line will act as a leash. When you get too far away, it's going to pull you back. And that's exactly what happened here. But notice how it pulled back to this line and respected it for about 3 or 4 months. Now, when this action is taking place and we're dropping in one time frame, on the monthly chart. On the weekly chart, we're actually breaking that 18. So this drop below 300 and just underneath and with a gap causes this 18 to actually start falling. So through really almost until early and right until about October, we had a 18-week line, which had been falling, and then right around September, late September, it started to turn up. Remember, we have a rising line on this time frame, and we're pulling back to it. All right, this is really important. We want to look for trends on one time frame, and then we're looking for the opposing pattern on the other time frame. That means that on the weekly chart, we're actually down while this trend is up. All right, and we're filling in by pulling back. Okay, now, we don't really want to play this until this line shifts back to the upside and we get price getting back above this line and turning that line back to the upside. All right. Now you can fine tune this. I can go back and show you where we had a little bit of sloppy action here where we weren't respecting the 18 and then we finally got above it and we actually kind of broke here and then pulled back right around the 270 mark, which, again, would be somewhere in here right as this line is starting to rise. Now, at that point, just so I can point this out, we were looking at right here, we're looking at right in here, and we're looking at it right about in here. All right. Now, we have 3 time frames with a rising 18, and we're not that far away from the line because there are a lot of times where you can be above a moving average, but you're really far away from it, right? Price is way up here and the moving average is way down here. So we want to recognize the times where we're above that moving average and we're not that far away. We're just initiating a new move, just initiating a new move, and just initiating a new move. This can be a pretty powerful tool even without the use of momentum. We can look for this and then zero in on the stocks that have this kind of in place where we had strong trend on higher time frame, and then the next time frame down, it wasn't a correction and it's turning back up. Let me just give you another example. This one's a little bit different. Look at Cisco. So Cisco had this pattern where it really wasn't respecting the 18, but the line was starting to rise here in 2024 through this period, right about the middle part of the year. But look at how this was declining on the weekly for almost all of 2024 up until just about a month or two ago. And then we got above that line and we found support at that line. Now, during that pullback to this line, we actually broke the 18. But once we got back above, crossing back above the 50 level, all right, getting back above 50, and let's just look at this, getting back above 50 here, getting back above 50 here, and getting back above 50. You see what's happening? We're above a rising 18. We're above a rising 18. We're above a rising 18. And we're in close proximity to all three of those lines. All right. Last one I'm going to use is Bitcoin. Now, this one is one that I have talked about for probably 3 of the past 5 weeks in doing my regular show here. I have been bringing this chart up. Why is that? Well, we've got this strong move to the upside and we have a trend on the highest time frame on the monthly chart, and we're pulling back towards support. Now, what's interesting is we didn't actually touch the line because look at how we form these tails, showing that there's underlying price support buyers underneath, okay? And we made this move where we pulled back and allowed the 18 to kind of catch up. All right. Now, through that correction, we had a declining 18, and then it started to kick into gear here, and we had pretty much all 3 time frames with a rising 18. Okay. Relatively close proximity. All right. We were a little far from the 18, but we had spent 6 to 7 months consolidating right near the breakout area. All right. And then we got the 18 week going, and then we got the 18 day going. So we knew that we kind of had confluence amongst these 3 timeframes. I think this can be a really powerful tool for you to start to be on the lookout for this for a simple moving average. Now, if you would prefer to use a 20, okay, a 20 instead of an 18, that'll work fine. It's not a problem. I use an 18 because I like to get the slope moving a little bit quicker. But the reality is that it's not that big of a difference. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. As always, my comments are for educational purposes only. Please do your own due diligence before making any investments. So what I want to do today is I've got a different layout that I use for the sectors. And what I'm trying to find is a combination, all right, a combination of trend in price and trend in the relative strength, all right? This line, which switches back between green and red depending on whether it's rising or falling, is the relative strength line versus, it's basically a ratio of the XLB in this case versus the SPX. So when it's falling, it means it's underperforming. When it's rising, it means it's outperforming the SPX. All right. And I've got this for all 11 major sectors. And if you see, we can just start with this XLB because we've got what appears to be an uptrend in place, right? I mean, we're making higher highs and higher lows. We have rising moving averages when you look at the price action, but we've kind of not been in favor when you look at this on a relative basis. It's just not strong enough on a relative basis. It continues to make lower highs and lower lows. And in order for this sector to become a leading sector, we need both. We need a price pattern that looks constructive and we need a turn in this, especially the moving average of the relative strength. We want to see a switch. We'd like to see a 1, 2, 3 reversal in the actual line, but then we want to see the moving average line also starting to turn up. That has not happened really over the last year. So you want to be aware of that, even if we're seeing a rising trend in the sector itself. Now, one thing I think is a little misleading when you look at this is that there are some areas inside of the XLB that look more attractive. But if you look at the bigger names in the XLB, there's some specialty chemicals that are really hurting this index, haven't been trading well recently, and it's making it look like the whole index really isn't looking that good. But the reality is that I think it's a little bit more of a mix. Now, when we start to look at what's taking place on a relative basis, again, look at the uptrend here, uptrend here, uptrend here. This one's not really an uptrend anymore. It's gotten a little weaker. But for the most part, look at where we're seeing this weakness, the weakness in the relative performance since October. You see this drop? It's all taking place in areas that I would consider to be more on the defensive side of the spectrum. All right. If we take this out and I explain that it's really coming from a chemical area, when we look at the rest of these, it's really based on kind of defensive stocks that were showing a lot of strength up until, right about the beginning of October, and then have really kind of given it up, especially on a relative basis. Now, the fact is that these trends are up. So this reversal to the downside on these could be short-lived. But for now, we know that that's not really where the emphasis is. All right. Where the emphasis is right now is there's a massive amount of power behind the financials. Look at the new high on a relative basis taking place here with a clear, strong trend. The problem with the financials right now is that they're a little extended. There's a lot of stocks in here that have made monster moves. Some of the regional banks might be worth looking into. Those are fresh breakouts. Now, we've got another area, which is the industrial space that is also showing nice strength. And really since July, made a nice bottom and on a relative basis have been improving. And we have a decent trend. Another area where you have to be a little bit more selective about your buying simply because there's some of these names are more on the extended side. All right. Now, the other area that has been good is the communication services. Lots of improvement in those. We have had a strong trend, but now we've just recently broken out again on a relative basis, certainly helped by some of the big names, but there is improvement across the board in some of those stocks. So, the one thing I want to point out is you've got a sector like the XLE, which hasn't really broken down. If we got any kind of improvement in the crude and saw an uptick, I think you'd get some breakouts in these, and I wouldn't be surprised to see this relative start to improve. The other thing I would tell you is that even though the XLK, the relative line is below its moving average, and that line is kind of rolled here, it's more of a neutral look to me. You kind of made a spike low and kind of been sideways. But more important to me is, again, we've got a pretty good look to the pattern, the price pattern. This is not a match. It's not like this one's going up and this is going down. You see what I mean? They're going in opposite directions. So when I see that, I kind of favor what's going on the price pattern. I like to look and see if it's not breaking down, then I'm more inclined to think that maybe we can get another move back to the upside. You really need the price to break down before you'd expect a long underperformance period. Based on the relative strength. So that gives us a feel for what's taking place. Now, the only other area that is showing a lot of strength, and if you notice, right in October, we had a decent pattern developing, but it really, right about the end of September, early October, really started to turn things around, and it's really kicked into gear. There's been a lot of new fresh breakouts, especially in some small and mid-cap stocks inside of consumer discretionary. So I think it's good to go through these. I think it's good to look for the matches, look for the ones that have solid strength and decent action in its relative strength lines. And I think you're going to find the ones that have the best chance of leading. Okay, so I've switched over to my 5 charts. However, before I get into the symbols, I wanted to show something I think is really powerful in the ACP program. Now, you can see at the top, I've switched this tab to the scooter rankings, and I've also changed it. It gives you the ability to use, I'm looking at mid-cap stocks. You could go through small caps if you want. I wanted to start with the mid-caps just because I think, that's an area that I'm kind of focusing in on right now, just based on the strength of that I'm seeing at some of the small and mid-cap names. But as you go through this, I'm not going to go through all of them, but one of the names that shows up, and it just takes me a couple minutes to scroll through these, and you can see, look at this setup. It actually looks very similar to what we were just discussing in the Bitcoin pattern. The only difference now is I've got the MACD and the ADX, and you can see this powerful strength behind this higher time frame, and then we've got a zero line reversal with reverse divergence and low ADX showing the buyers are still in command, and now we're getting a breakout pattern developing off the earnings. We get any kind of a little minor pullback, and we're going to have that confluence amongst the three different time frames, very similar to what I was talking about with the Bitcoin. So definitely worth going through these since it only takes a couple minutes. They've laid it out for you by capitalization, which I think is a massive advantage. All right, let's go ahead and switch over to the individual symbols. And I'm going to spread this out so we can see a little bit better. All right, let's look at the QQQ. So we're finally getting a breakout in this. I mean, this was this was not a leader when you think about what's taken place here. We just finally have broken out in this sector, but we are starting to see a little bit of improvement on a relative basis. Now, this goes back to what I was talking about with the tech sector, which makes up a lot of the QQQ in terms of market cap. We didn't see a breakdown in this pattern. We're still well above a rising 18-month line. All right. Even though this was starting to roll over, we need to see both. We need to see this break and this break if we're going to expect something that has a longer term decline in it. So this is something I've been talking about now for the past few months. So it's not a surprise to see this kind of squeaking out a new high. Wouldn't be surprised based on the current action if this doesn't continue up until the end of the year. Now, one thing I do want to point out is we have a lackluster ADX situation taking place. We're at a new high right now here. And the ADX is way down at 10. So what could end up happening is, we could have some strength and maybe we even get this green DI to get finally going again and break out above the red. And that causes this blue line, this ADX line to climb. But I would be leaning towards expecting this to fail below the 25 line on its next up move and roll once it rolls over. Now, that might not be until early next year, but I think it's something we got to be on the watch for just based on the way this is playing out. The ADX is starting from such a low point, and we're already somewhat extended. We've already made a pretty good move. I mean, this index has gone from 425 to 510. We really haven't seen the kind of improvement on an ADX basis yet. Now, where we have seen improvement, and what I talked about last week and what the dynamics of this green DI has already broken out and made a higher high. You see how we're turning this ADX line? Look at the volume pattern. And, I personally think we just went through an extended period of consolidation after trying to break out, and we didn't really follow through from that, but we built another base. So I call this a base on a base, and then we break out with some dynamics. Again, we can see it on the longer term time frame. This doesn't look late to me. This is a low ADX condition, and then we had low ADX, and now we're starting to get the DI going. If we can get the ADX to cross above 25, I think we'll get our confirmation on a relative basis of this line breaking out and turning and creating that 1, 2, 3 pattern. So if I draw this downtrend line, that's the 1, test is the 2, 3 would be coming up through here, and that should also cause this moving average to turn higher. We haven't had that in quite some time. I think that would be a bullish scenario. Okay, let's look at a couple of symbol requests. This DraftKings, I think, is really attractive. Look at the move to the upside, and then we get some strength in the ADX because let's just look at this really quickly. You see the reading we're getting? We got a reading up almost 40 before it pulled back. You can see that green is staying above red throughout the pullback. All right, so that's the higher time frame, and then the lower time frame, we went through what I would call a 1, 2, 3 reversal. We had the 1. 2 was the test, which is the test of this low, and 3 is coming back up through this high. Now, it's not really confirmed yet. I'd like to see this come back up through and maybe take that out, even on a weekly closing basis, but the action is good, and we actually had a pinch right near the 0 line, and we do have green DI holding above red. We've got a lot of things suggesting that this might be getting ready for its next up leg. Now, again, we moved up on earnings. Maybe we get a little dip, look for a higher low here. That could be pretty attractive. Now, NVO, we've seen a lot of damage done recently to some of these pharmaceutical stocks. We'll notice the Merck kind of giving it up. And as I go through more and more of these, they've been struggling. Where I want you to focus, though, is if you're looking at this, you look at the ABC. Now, this last portion, look at what's happened to the ADX. You see how this ADX is rising based on the red. It's based on the sellers. That's a lot of strength in the sellers. This tells me I don't need to be in a hurry. I'm not buying the first leg off the low. This is going to need to go through some mending, and it's going to take some time. So don't be in a big rush. Yeah, it could make an interim low, and unless you want to trade it really short term or something like that, I don't think I'd focus on this. I think there's enough damage done that it's going to take more time. Now, we've seen some improvement in some coal stocks. The CEIX is my favorite in the coal area. All right. Now, this one is starting to emerge, but I don't really like the reversal. You see how we formed a tail here, and now we're kind of giving back a little too much. Now, what I would tell you is if we can work our way back up through this high, this is the close of the big week up, which is the breakout week, and this essentially, if it can finish the week like this in this area, then we'd have an inside bar. All right. If we can take out the high of the inside bar and the high of the close of the big bar up, then I think we'd have a little bit more confirmation that this is truly breaking out. If not, I think I would pass on this because of the way this is developing, it could take a little bit more time, and maybe it doesn't play out until early next year. All right. The final request I have is this SMCI. Now, what we've got is what I would call a fallen star. All right. This is a stock that went through an incredible phase to the upside. And then we had this massive. So look at the volume explosion on this move to the upside, somewhat climatic. And then on the way back down, we did some damage, and what I was telling everyone, my subscribers, is look, we need to get back above this 100 mark. If we don't get back above 100, there's no trade here. We failed. We actually, we made this mark here. We came up and tested it, and then it worked back down, and now it's really just in a bearish trend. We've really turned things to the downside. We've broken the 18-month. I think we have to go through a full rehab phase, right? This needs to go a full mending phase and recreate a new base of support before I'd have a whole lot of interest in it. So unless you're a trader and you just want to trade it for a couple days, I don't think I'd be that interested. Thanks for watching today. If you have any stock requests, as I said, you can send it to stocktalk@stockcharts.com or just put it in the comment area below. Also, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.